What's up, everybody? Good morning. All right. Oh, there's the music here. So I'm running a little late today. Another flat to choppy day, limited upside below hedge pressure. This is also a bullish setup as well, BSU. But this goes all the way down to 470. Wow. Okay, so there's really nothing to do on this one as well today. All right, let's see what we got going on here. Good morning, guys. Okay, so res is decent. Here to hedge pressure, that's about a 70, like 3 points. There's no room to move here. So the only thing that's worth taking. Touch what you're calculating to be the same as yesterday. I mean, it doesn't happen often. Probably in like flat holiday weeks, you're not expecting like drastic changes in the market. So, all right, today's setup. Let's go. BSU has long pressure from MHP. MHP is like way off the chart. So if you have res greater than 0, that's it. There's no trade between here and here. It's too small. So res less than 0 is obviously this way. So it's a split between here. There's very little upside on that. The only thing that I do see worth taking is the small chance of a break. If break. Like if break. I'll take a long chase on a break, as long as all the things look pretty decent. But here's the thing. VIX right here, and also it's pretty much triple B is here as well. So you got some really key hedge points on VIX. So again, it's just going to be like yesterday. It could do this. Okay, so be very careful. This is a day it's going to bait upside. That can possibly fall. Now I'm saying it will. I don't bet on that. We don't take a bet on this. But there's no. This is no trade here. No trade. Nothing. This last trading of the year as well. I'm not trading in here. Nothing. And news in 15 minutes. Right, so we have limited upside today. It's the same as yesterday. Don't you guys like waking up and being like, oh, just like the same as yesterday, right? So I'm going to take the break play if I see it. That's it. I'm not going to take any scalp to it. We are right here, this key pivotal level. So anytime VIX can hedge itself a different direction, always take note, trim my positions. All lights are green. Things are looking pretty snazzy today. So no trade in here. Resilience is going to pivot us inside of that. Positive res out the box. I'd say that like right now, limited upside and caution for downside. Not that there's any signs that will sell, but there's signs that that the long side could exhaust. And if there is selling, it's a little volatile. Hey, what's up, Brian? Hey, you gonna come hang out on New Year's this year? All right, guys. Good morning. Let me drink my coffee and wake up here. Just recently had a death in the family. Someone really close to us. So I'm gonna be spending a lot of this weekend with family. By the way, especially this afternoon. So I will probably not be around for a Zoom call today. Apologize for that. Where did I post Zoom links in Discord? Great question. It's a channel called Zoom Calls. It's under the there's chat rooms, there's futures and index crew. I do my Zoom calls in there. All right, so positive resilience, and we have a little bit of divergence on the Nasdaq, kind of somewhat coming down. Again, this is not really a good setup for a long trade. On the hedge break, I might take, but then again, there's still limited upside, to be very, very, very careful on this one. So this is expected to play inside of here, clearly. These are all bullish setups, so I don't short, by the way. I don't short these. Oops. BSU is like the second most bullish of the setups.
kitchen and you say,
"This is ludicrous."
You get
Having trouble? Don't panic. Don't be alarmed. If you file a claim, holla at State Farm.
that's right. Like a good neighbor, State Farm is there. State Farm.
Oh, all right. So no trade today again. This is gonna be one of those. Let's see, I'm not doing much. I'm not doing much. No trade. The no trade zone. See, this is what I love about Rocket Security. See how easy this is to just sit out. Well, how easy it is to just not be like giving a shit about everything. Just to kind of like. Do I have a journal? Oh, thank you guys. Y'all are really sweet. You have a journal that I write in while you trade paper electronic. I don't, and let me tell you why. Not that I'm against journaling. Journaling is great. We're going to create an AI journaling tool that'll journal for you based on your actions and things. Well, it's our future like design of the platform. It'd be kind of fun. But the idea is I don't journal. And it's a great practice. I just have gotten to a stage of my trading where it's very routine and I don't really have much to journal. I've kind of boiled everything down very simply to what I do and what I don't do. And if I'm surprised by something, like sometimes if you journal that, and this, again, this is not to dissuade you from journaling. Everybody should do something, but journaling is to find yourself. The act of writing something down commits it to memory and commits you to analyzing and thinking about it. There's all kind of psychological benefits to journaling in anything, like journaling in your life, journaling in trading, whatever. So I know if like I'm in a trade and it goes against me, I'm very good at self-coaching without journaling. So I've like evolved to my final form, I guess. That's starting to sound very Super Saiyan here. Where I know journaling is to give you the ability to have some kind of reference point to self-coach. I'm very good at self-coaching. When I fuck up, very rarely do I not understand why. So journaling would be a lot of extra work to reach the same result. So when you get really good at like something, like you're a cellist and you're playing in a concert and you miss a couple notes, you don't need to like, why was nobody paying attention? Why did people walk out? And you're like, oh wait, I remember I missed those 2 notes and I know why and I know what I was doing. And okay, I just remember. And you'd immediately just evolved your journaling into like journaling upstairs very quickly. So great question. But journaling is great to help you discover your process for like self-coaching and healing and stuff in life. It's really good practice. It's just if I'm in a short and it goes against hedge pressure and then I hold past another strike and bag hold and blow up the account, there's nothing to journal other than I knew exactly why I did what I was wrong. I'd be like, oh, I didn't stop when I should have. And then I know that I should have. And then the part of the journal that would be important is what was I feeling that day? You know, like, why was I distracted? Why did I hold? Was I going through some shit? And like, if you're like, oh, you know, it's like, obviously I recently had death in the family, right? So I could be like, oh, that was the week that someone passed and I just wasn't all there. And then the goal is to discover, oh, you know what? Don't trade when you've got things on your mind. And then so the journaling is to take you through a journey to come to some kind of conclusion where you can coach yourself on your choices. But if you can do it in your head, it's you know, like the ultimate goal is to be able to self-coach on the fly. So but yeah, great question. An Excel spreadsheet is great. That's what most people do. That's what I did for many years. I used to write in Excel, like any good trade, any bad trade, anything I did. And the more you do that, the more you discover a trading process. And then just a decade later, you come up with an entire system of trading based on the results of your journaling. So the output is you come up with a very systematic approach, hopefully, which I done. And so therefore, since I've traded my style into a systematic approach, that's the result of years of journaling. So the answer is it will get you somewhere. You might invent some kind of conclusion that's like, oh, this is great, works all the time. Bull zone, you know, rule, half gap rules, you know, resilience rules, things like that have all come from my paying attention to the history of my own trading and observational results. All right. But yeah, Jared, like journaling is a great thing. And if you do it, you would start in like a, you know, how to journal is an important question too. Like, what should you write down? And it's kind of like a lot of people will journal a bunch of crap. And this is what makes journaling suck. Like, you'll journal. Well, okay, let me start over. No, forget that. Forget I said this, because this is actually good. In science, when we discover something to be a failure, then we know that we learned something that isn't true. Like the earth is round, and they used to think it was, you know, the earth is whatever, you know, the earth, some people think the earth is flat. But if you think like, you know, the sun revolved around the earth and they found out the earth revolved around the sun, sometimes you can disprove something false of observation. So like if you have some indicators and your indicators crossed over and you're like, okay, my signal fired here, my RSI was minus 60. Okay, so that's oversold and the things crossed. So I bought one of these indicators. So your journal is like describing your indicators, right? So you have variable A and variable B that led to a choice. And then you had your psychological choice, which was in there. Okay, I decided the long, and whatever I was feeling or going through that day, all right, C equals whatever. And then the trade didn't work. So you're like, okay, bad trade, lost money, lost a lot of money. So your goal is, all right, so you wrote a whole story about what you did and why you did, but you have 3 handles. Okay, why did I lose money? Was it because of A, B, or C? You have 6 independent combinations, like, you know, or actually if you independently have A, B, or C, right? A and B, A and C, B and C, or all 3 of them. It's actually 7, right? So which one of those 7 possibilities led to your bad choice? That's a lot of, you get a lot of combinations there, right? Your goal is to find out independently what correlated to your bad choice. And the more that you learn about yourself, the more you do. So if you start journaling your indicators, you have to isolate other journal entries to say, okay, because you can't just compare all these variables to each other in the same set. So if you had like another day where it was the same thing, right? A, B, and C, and then your RSI was minus 60 and your crossover didn't happen, right? And you felt the same way as C, and you still made a bad trade and blew up. Now you go, oh, okay. So these 2 were the same when I made the bad trade. These 2 were different. So let me eliminate A from the data set because it clearly wasn't A. The good signal or the bad signal, I still made a bad trade. Oh, well, maybe I'm making a bad trade because of this identical thing. So you isolate variables, right? And you start to come up with conclusions where you start to learn about yourself. You're like, oh, you know what? This indicator is leading to me making a bad trade. So your goal with those people will log indicators and try to start just, okay, what was wrong with, you know, my indicator? And they still kind of like try, okay, maybe I'll try minus 50 or maybe I'll try minus 40. But at the end of the day, your realization should be B is just a piece of crap and I should throw this out and not even use it. And then start trading without it. And then are you making better decisions, worse decisions? So journaling should drive you to an answer, right? And what most people do when they journal is completely fill their brain with confirmation bias. Your guru is telling you, use these tools work. And you're trying to like read around the evidence that you have they're not working to try to still figure out how they're going to work. And the crappy part about what they call, now let me tell you the biggest scam in the world is called multi-time frame confluence. Okay, this, when you hear that word, please, you know, put your wallet away. What indicator sellers will do is they will sell you an indicator and then tell you use it on multiple time frames to even further muddle up the, you know, visibility of them not working. Oh, well, you have it on a 1 minute, but make sure you also look at it on the 5, the 30, the hour, the 4 hour, and the 1 day in the week, all at the same time, and then you'll get a greater understanding. And then now you have 6 more variables for one indicator, and you're never going to come to a conclusion. Just keep somebody spinning with a bunch of handles to turn, and they'll never realize that it just doesn't work. So you have to be careful when it comes to journaling indicators. Journal feelings, journal your what's going on, journal any actions that switch the market up, like a catalyst or an event. But don't get so buried into like journaling the handles that you choose on the indicator. Well, I did the 1 minute, the 5 minute, smarter. Let me try the 5 minute and the 20. You're going to create so many different variables, you'll never come to a conclusion. So you have to keep it simple and start to eliminate things from your diet. And the faster you can do that, the better. So you have to start comparing like A and B. Don't have like 5 or 6 things you're journaling about at once. Find 2 or 3 things you're working on and really find out. Like this month's journal is to decide if hedge pressure really works. Okay, let me start journaling the times I long and shorted off hedge pressure, and just kind of keep everything else consistent. Okay, I'm going to trade with no catalyst. I'm going to trade with inside the DD bands, and I'm only going to long or short on hedge pressure with the liquidity map. Okay, there you go. You've given yourself 2 variables to test, journal it for a while, see how you behave under that. First of all, see if your indicator actually works. And you only have a few handles that you're looking at while you journal. What you're feeling, what happened in the market, and what you're testing. Keep it simple. And your goal is to just slowly over time add things or remove things from your diet that work, right? I've learned that through that behavior, I've learned there's just days I avoid. This is the 3rd day in a row I've done no trading. It's the 3rd day in a row the market's just been dick. And I said it before it even became dick, like no trade in this zone, right? Your ultimate conclusion is to come up to be just like me here in a way that you found a day that you just don't like out the door because you're so, you've journaled it 1,000 times. You know exactly what's going to happen. It's going to be random and choppy, and it's not worth playing. And so the more you do that, the more you'll come to a conclusion. But if you muddle up your journal with so many different entries, there's no way you're going to find a way to self-coach. So keep it very light. And that's my tip. Does everyone understand when I say that's my tip? You're testing something, maybe a couple things, but if you got 8 variables in your journal entry, just, you know, you're leaning towards close to, you know, 8 factorial combinations of things. You're not going to come up with a reasonable conclusion to like change your behavior. And that's kind of like, you know, when you go to therapy, if you have like relationship problems or something, you know, everyone's got a whole myriad of like things they've dealt with and crap they're going through. And, you know, the therapist usually finds like one thing and then targets it. You know what? Hey, let's talk about your childhood. And then they dive into that. And then they start, you know, really pressing one thing instead of talking about all the thousands of things that are going on. And then seeing like, okay, is this part of what's going on in your life? So you really want to just compare like 1 or 2 little things and see if it relates, and if not, and then make a step change. How'd your performance change? And it's just most people that journal waste so much time. That's the reason that, you know, there should be like a course on how to properly journal. And it's nothing to do, as you see, it's nothing to do with trading. It has everything to do with the good scientific method. When you're testing, what happens when you mix 2 chemicals together, you know, and it gives you a result. Well, if you mix 2 chemicals together at a higher temperature, it should give you a different result. You mix 5 chemicals together and then change the temperature, you get so many variables you're adding. You're never going to really understand the process of how A and B react if there's C, D, E, and F mixed in with it. So in reality, it's all about data. It's data collection science, right? You want to make sure that your journaling is to improve your behavior as a trader. You're collecting data on yourself. You have to collect data in a correct way. And most people don't learn how to do that. Engineering school literally teaches us how to do that. And anybody has a math focus in their diet in school learns how to do, you know, data collection and analysis. You have to remove redundant things. You have to remove things that don't correlate as fast as possible. You can learn that you don't know something like, oh, no matter what this indicator does, I still make a bad trade. Okay, well, then it has nothing to do with the indicator. Then you've wrote that down. You've learned something. Aha, the indicator is not why I made a bad trade. And I just make the bad trade when the signal's good and bad. So maybe there's something else to explore. Then you just achieved one step in the better direction. And when you really boil it down, journaling it, because it's such a simple process as you evolve yourself in journaling I've been trading for now 13 years, almost 14 years. You really just don't have much left to journal. There's one step change or 2. There's like 1 or 2 things that you're still working. You're always working on something, but it's like when you start off, you have a million things you're working on, right? I've kind of wiggled myself into a style to where now it's like, okay, my journaling would be like, it's all mental. It's fine tuning. Like, should I short off the blue hedge pressures all against all these upward green arrows, right? Should I short this? And then I go, okay, well, let's think about it. No catalyst. Okay, check. No lights. Check. VIX is a caution. I know I don't really short bull setups at the greater bull market. So the answer is no. Well, how do I know that? Just because each one of those are independently tested and then I observe it. In the last 3 days, I'm like, I'm going to sit out. Well, that's a result of, you know, my internal journaling. I just don't play short, choppy days with crummy R to R. Even if they go up, even if they go down, I'm just better off sitting out. So as we've seen today, the market's open and kind of gone nowhere. And that is a result of self, analysis or whatever. But yeah. When I read people like talking about their trade journals and I read them online, it just is like, it just is, and I just look at it and go, you're not going to gain anything from this. There's a lot of work you're putting into this for no real reason. And a lot of times people get, like I said, people get stuck in their guru's, sales pitch of multi-time frame. And then, so like the journal is literally like all the different handles. Well, today I traded on the 5 minute on these 2 indicators instead of the 1 minute. And then I made a trade and lost money. The next day I traded on the 5 minute, made all this money. And then I changed it to the hour and the daily. Like when you start playing with so many handles at once, you're going to go nowhere. So again, my last tip for this on the subject is find one thing that you're testing. Isolate all your other variables. Okay, I'm going to trade when there's no catalyst. I'm going to trade within DD bands. Let me find out how many times I long off of half gap when resilience is positive. Do I win the trade? Play it for a couple weeks. Start to lean in the right direction. Oh, I actually won 7 out of 10 trades. Okay, or I lost 7 out of 10 trades. Either one of those is a great data point. Okay, maybe that kind of trade is not for me, or maybe it is. Let me test it further. Okay, let me test it with another variable. Can I strengthen or weaken that? And you just make small step changes, and that's really the way to go. So Jared says, I write on a paper every morning with opening liquidity maps, usual checks, liquidity map and setups, I want to trade for the day, and news. You have checklists you follow also based on your journal and self-coaching. That's beautiful. That is exactly what you need to be doing. And making sure that when you're analyzing your journal, it's simple, it's concise. You're analyzing the same thing where it's easy to go from like day to day to compare. And yeah, so you notice, like you see me in the morning, my journal is the same check. I go through the same pre-market steps. I go irrational, rational. Okay. Inside of DD bands, outside of DD bands. Okay. So I make that check to say, okay, are we good or not? Okay, good. I read the news to make sure there's nothing crazy going on in the news. I look at that and go, okay, news is good. We got economic calendar. Do we have anything coming up? So I know any time to be out of a trade or on the sidelines. Okay, check. And then that's basically it. Like, today really has nothing going on except for the PMI, and that Chicago is really not going to do much to the market. How do I know that? Well, again, isolating that over years of trading, I just know that while it does give visibility, I've never seen really the market fly off the handle on the Chicago or Philly or in these other small number data sets that are just like on the city, right? So going forward, you go, okay, pre-market check, do that same thing every day. And then now you wake up just like you did. Are we unusual? Are we going to be overshooting pivots? Is there volatility concerns? Okay, not really. All right, now boom. What's the greater market look like? Bullish, monthly map bullish, above monthly hedge pressure, bull structure, bull, check. DD's great. So I got bull zone support. Resilience is positive. We're floating up this direction. Liquidity maps all bullish, no shorting. So immediately, right? Those are all independent things I've worked out over the years doing this style of trading. And as you start to create how you operate in this style of trading is going to come from your journal. So it's like some people like to short off a hedge pressure. I don't. It doesn't mean it's a terrible idea. Off of blue hedge pressure in a bull setup. Like people, it'll hit and they'll short. It's like, just because the way I trade, it doesn't match that. So it's not like it's right or wrong. It's just my style of trading doesn't match that. And that's my psychology and my patience and my desire to be in and out of a trade quickly. But it doesn't mean it's a terrible trade, right? And so your journaling is going to tailor your style to you and your behaviors. The 0 daily. Observe, orient, the UDA, decide, act. That's perfect. And that's how you should, like, if you have a process for journaling, that's exactly correct. And the reason I say most people do it wrong is because they don't have a process. They're just like freelance, non sequitur, writing up their thoughts, and there's no process to it. Your goal, journaling should be a step in a process. It shouldn't be the last step of what you're doing. It should lead you to a greater choice, a greater understanding of yourself or your behaviors. Yeah. Great question though. So people say, Matt, do you journal? I do, but I just don't write anything down. It's all in my head. I've gotten really efficient with that behavior that I'm not making a million step changes. I'm successful as a trader. So my fine tuning is smaller things, greater understandings, higher confidence. something that works 80% of the time, can I make it work 82 or 84 by changing this little thing? So I'm in the realm of like modifying noise. I don't have much left that I can work on, I think, on a greater sense, because 13 years, you ultimately will either give up on this job or you'll find yourself on what works for you. So some of my later things that I've been trying a lot are, you saw me earlier in the small account challenge taking shorts in a greater bull market because of volatility. And as we learned from that, that doesn't work. So like as the market has been like rallying for the last couple months, there have been days when I've tried to short it because of volatility, because we broke out of DD bands, and I tried to short off of the DD band despite it being like a bull long up, and we like basically traded all the way up to here, hit the DD band, I tried to short, and ultimately I got squeezed out more than it worked. And then that leads me to that consideration of, okay, just stop shorting the greater bull market no matter what. If you have such strong bull settings, bullish market, bullish liquidity map, bullish hedging structure, then I don't short a greater bull market. So that would also lead me to say, well, let me not short off a hedge pressure. But then if I see that this does happen one day because of the volatility, I don't say, oh, you know what, maybe I should start shorting that because of that one data point. I'd have to observe it a bunch of times. So that's kind of been my latest, you know, what am I working on is trusting. Well, and again, we haven't had the DD number for that long. We invented DD a little bit over a year and some change ago. And so having years of just trusting this greater bull market indicator is like, okay, everything's bullish right now. So I'm like, okay, let me find a dip to buy on. And so that's kind of the realization I've gotten to. Yeah. So if you're really just like analyzing one thing at a time, it really helps. But you should always be self-coaching. I just kind of self-coach on the fly. But I've gotten into such a routine that I don't get a lot of I don't do a lot of variable things. That was a variable trying to, like right now, I'm like, ooh, should I short against hedge pressure? Well, volatility is going up, so maybe I'll get some wiggle room to play. Maybe we'll get some V's. But I always, okay, but you know, what should I do? There's like a 9-point range that we've been trading in. Is it worth trading inside this range? You know, not really. Do I visualize where I self-coach? I usually do, yeah. Like to me, it's like I would know, because I don't do any avant-garde trading. I still do the same. I trade off of a pivot every time. I don't just do random things that introduce a new variable. Like I'm always testing the same thing. Okay, like, oh, shorting off a hedge pressure today when volatility is possible with a rational market when all signs are pointing up. Okay, I'm learning that that's probably a terrible trade. So do I visualize where I self-coach? Would be like if I did something random, like, okay, like if this is trading up here, I just longed betting on a break and then it falls to here. Like when I get on a trade right here, I'm already saying, okay, I know what I'm going to test. I chased this long and I got into, oh shit, okay. So what am I going to do if it falls to here? What am I going to do if it falls against my stop? What am I going to do if res goes negative? What am I going to do if volatility bounces on a pivot? So I already know what I'm handling in each side of the trade. And if you just like if I avant-garde would be like, oh, I chased a green candle, which you don't see me do a lot, right? So if I do something off the beaten path, my brain's immediately going, okay, what are all the contingencies that I have to pay attention to? Because I did something unusual or bad. And you'll usually hear me on the stream say that, oh, I fucked up, guys. Immediately when I get in something I don't like, y'all remember, right? Over the years, you always hear me say like, oh, I don't like what I just did. Immediately, y'all have heard me say that, right? And then I'm in a trade, I'm like, oh, I'm going to be fighting this all day. Like I know when I mess up, okay, now like, how do I going to handle this? And so that's really what you want to do is be at the point where you do something and you know you're off of your system and you immediately know what's going on. Like here's an example. Like if I trade a short right now and it pops up like this and keeps going and then I short again, something I would never do. Say I shorted once, shorted twice, and it's up here and I added to it and it's starting to go like this. It wouldn't be here before I knew there was a problem. Oh shit, I'm upside down. What do I do? It's more like I shorted, it broke through, I shorted again, and then it came down. Some people at this mode would be like, okay, phew, okay, I'm breaking even. Maybe I'll get the trade. At this mode right here, I'm like, I'm fucked. What are all my contingencies? The minute I decide that like the trade goes against me, like it's like right here where I'm already worried. Like I know, okay, this is not good. What did I do wrong? Should I add? Should I not? It's not waiting for things to get bad before you journal or waiting for things to get good before you journal. So on the fly, you try to visualize when you've done something you don't normally do, because that's your step change. And then you're just paying attention to, okay, what are my other variables that I can rely on? I know resilience tells me this. I know DD tells me that. What do I do from here? And ultimately, like, you know how every morning I get up and I draw the trade plan, and it's pretty much always, the pivots are always on point. I mean, you really rarely see me get this wrong. A catalyst is the random part. So the catalyst, it would be wrong. You know, or an event could be wrong, or a hedge pressure break, the market could be random. But we know where it's random. Like, we know up here it's random. If it breaks that, right? And so I would know all my handles even before I make the trade, right? Where's the current long exit target? Let's test you guys here. The current long exit target was hedge pressure in this no trade zone. You see how, do you guys see how this works? See how I'm not longing into the end of the trade? I said, if we break, that's the long I'm taking. Irritate, you see how this is it? Okay. So let me quiz the group. Say that I take this long here. Where's the exit target? Let's see if you guys know. Let's just be real about it. Say long on, say that I take this long right here. Where's my exit target? And so irritate, the reason I haven't longed yet is because the exit target was right here. It's just literally 3 points of move. It's not worth touching. Yeah. HP for the first lot. See, Vin knows, Rowan knows. Yeah, DD. Like, DD is the only one. And then what would you tell yourself, right, everybody? Or a yellow line if we have it. Yeah, MJ, you guys are y'all are all on point. All of our exit targets. Or is there a gap fill, right? We don't have any of that right now. I don't think. Let me pop out a chart really quick. So we have our exit rules we always talk about. So let's find them all. Let's just narrow them down one at a time. I always start a gap fill is the easiest one. Yeah, everybody here, y'all nailed it. I'm very proud of y'all. Y'all are so good at this. All right. Ugh, this is not the chart I want. I want to do the daily chart. Do we have any? Oh, that's the old one too. Where's my? I thought I had some gaps on here. Okay, well, maybe I don't. Let me just get all this stuff off of here. Oh yeah, these are all the old gap fills. So I actually need to come through and just update this. Okay, so that red line has been gone. Okay, so let's see. Do we have any gaps to be filled over here? Let's double check. We don't. So there is no gap fill. We're actually pressing towards all-time highs. Right, that 480 level, give or take, and we are literally right there, close to it. So eliminating that from consideration, no gap fill. All right. We have liquidity pockets or illiquidity pockets. There's nothing like that in the way. Yellow lines and red lines, there's nothing like that in the way that I can see. Again, this is my other chart that has the yellow lines. There's really no yellow line in the way at all. So there is nothing except for DD. That's the last, really, like the last place. Then one must ask themselves, okay, so from here to DD, holy crap, that's 30 points a run. That's a very large run on a slow day with no news. It's going to be really hard to achieve this, right? Just historically, you know that. And you're going to need a reason for the market to run this high. Okay, so throughout the rest of the day, it's not going to just run that high with no catalyst. So the question is, the answer is probably DD is the only observable target. But let's see how many of you are advanced. If you can read my mind right now, I'm going to be so impressed. Okay, let's say that we've married the idea of DD. Read my mind and tell me what's my concern. I gave you a hint. It's 30 points away and there's no real catalyst and it's the last trading day of the year. Tell me something that would come at the end of that sentence in regards to DD. Don't say volatility is not the answer. There's one more consideration. You're close. Let's pretend that VIX isn't the problem though. In this example, let's pretend VIX isn't the problem. Risk interval, well, it's 30 points, right? So we need a risk interval move. No catalyst, low volume. There's no exit level, right? That's correct. But let's just say that we want DD and let's say it is possible. Keep thinking. I want to challenge you. Something should trigger in your brain. Your caution is not where. It's the hint. I'm asking you to read my mind. No. Just keep going. Keep guessing. DD is very possible right now, and it's 30 points away. Right? Okay. But there's nothing that's really going to take it there. Time. Alex, let's go. When? When will it happen? Alex, chiming in, give me the goosebumps. When? When? Break HP, but when? How long will that trade take? After 2 p.m., you guys are getting it. Now keep going. After 2 p.m., now you guys are pros. I'm loving hearing this. After 2, Ven is on the same page. It's going to take all day to get there because after 2 is the only real variable that would get that market going, and it'd be the ramp up and the close. You see how good you're getting at this? I already know that on hedge pressure break, to get a 30-point run, the only way it's going to take all day. And that's how you hear me say that sometimes. That trade's going to take all day. There's no real mechanism to push it higher. A hedge break will start the chain reaction. But to get 30 points, do you all agree it's going to take all day? You like this exercise, right? I didn't want to tell you what time. I wanted you to immediately start digging in your own brain to say, oh, it's going to. So if you said time, Alex, it's because you guys are thinking you need to also consider that without me telling you to consider that. I already know that if I take this long trade, there's no immediate trade exit. 30 points is very hard to obtain without a catalyst. Hedge break at 477 would create an event, sure. But for it to go 30 more points just on that, we're going to need the run up and expiration to trigger that type of movement. You guys got it? You have it now, right? So now I know I'm committed all day. So now I say, oh, you know what? I'm in this trade. This is an all day trade for me. And what if you have like 4 or 5 important meetings coming up at your job? You're not gonna be able to pay attention. So then you'd say, you know what? I'm gonna call the stream guys and see y'all later. I got 10 things I got to do today. I go visit family. So now I wouldn't take the trade, or I'll take the trade on the break and then set it and forget it and either get it or I don't, right? If HP breaks, I'm taking the trade, but I already know I'm committed to a whole day's thing to actually get a substantial move, right? To get at least 2 or 3 to 1 on a trade like 477 break, I'm going to need to hold all the way until 2 and then bet that coin flip on those 0-day expiring options create a gamma squeeze up to keep me going, right? And at 2 p.m., I'm essentially gambling on a coin flip. So how big's my position going to be, everybody? If I know at 2 p.m., that's where I'm looking to ride this trade, then if I get in at 10 a.m., am I going to get in big or small? If I'm betting on an irrational move to carry the way. So let's take it one step further. Alex, then what do you got? Am I trading really big on a hedge pressure break? I'm going to trade small, very small. So you see how like I'm literally 5 steps ahead. I'm just going to put like 5 minis on it or 5 micros on it and set it and forget it and walk away. If I get 30 points on 5 micros, that's fucking great. It's a lot. It's a lot of money, right? That's $750. If I lose 10, that's $250. So that's good R&R. You see how I immediately went to time and then how big I need to trade? Because I know that the variable that's going to get that trade going is an irrational move, a coin flip at 2. Do you think I want to be super heavy in a trade? No. Because I know I'm going to be betting on a red light. So now you see why you watch me every morning. Your goal is to understand that not just where do I get out, but how long am I going to be trading and how big should I trade? And the 2 steps ahead is knowing that your option is probably only be created during the irrational point of the market, which means you would be trading small at that point anyways. So when I get in on the trade, it'll be small. And now you start to think, okay, right? You're like, oh man. See, I don't normally speak from my head of why I'm always thinking these things, but when I always tell you, okay, I'm going to trade small, or I'm committed all day, or it's going to chop all day, or chop until 2, always think about how long you're committed and how long the market's going to bounce around. Right now, I think we've got 2 options until 2. It's probably either going to sell off for whatever reason, which I'm not betting on, or it's going to chop around this no trade zone until, you know, maybe 2. Okay, let me set an alarm here. If it breaks hedge pressure, I'll come back and trade it. I'll put in something small and then let it ride. Is this helpful to you guys? I was hinting, so don't always consider your price and your pivots. How long are you committed to this trade, and should you trade big or small? Are you going to pass through an irrational zone in the middle of your trade where you would trim anyways? Okay, so start off small. right? And then now you have a very like consistent logical approach to the market. What happens if the market sells today? Well, okay, let's read my mind. Market's going to sell off today. Where is it going to go? Pick a target. Say it's just hitting hedge pressure and selling off. Everyone, where's the short? If you were shorting here, where's your exit target? The same things. Are there gaps? Are there, you know, anything in the way? Where would you get out? Yeah, either here, correct, or here. Yeah. Or bull zone bottom, but whatever happens first, right? Which bull zone bottom is really far away. That's 80 points away. So that's really far. While that is correct, it's not going to be the first thing you hit, right? So the first thing in the way is this is, you know, 15 points away or 14 points away. The middle is 40 points away. So yellow line's probably the first target you're going to hit here. So there is a, you know, 14 to 10, 1.4 to 1 trade on the short side. If you short it from here with the stop, set it and forget it to there. That's achievable before too. That'd be very good. If you were in the short, you're going to want to see volatility like support areas and keep pushing higher. There's really no catalyst to sell off the market. Everything's bullish against you and the lights are green. So one might say, okay, well, 17 points is half a risk interval and there's no catalyst and everything's bullish. It might take all day too. No crap. So it's like the upside might take all day. The downside might take all day. It's probably choppy today then. And it is. And then I automatically go to the no trade. That's where I get that. That's how I did that. I analyzed both sides of the market and both sides look like they're going to take all day. The all day on the short side is because there's really no catalyst to push it down. Everything's bullish. So again, it might take till 2 p.m. to get some downside because there's really no evidence it's going to come down. Now it could randomly come down in an hour. I know, but then I say, okay, that's not the predictable part. So I go, all right, it's like all day to move 17 points this way, all day to move 30 points that way. It's stuck with bull setup with some possible volatility. We're above triple B. There's probably going to be no trade and we're stuck in a zone. Bullish is pushing up, resistance pushing down. And then now I backed into this. I'm just not going to trade. Right? I'll trade small on the hedge pressure break to the upside. I'm not shorting blue down to yellow line. And I know it's going to be flat and choppy in a very tight range. No catalyst to push us until 2, etc., etc. Would it be possible to build an indicator based on which targets would hit first? Inside, that'd be a great idea, actually. Super great idea. So, and usually like when I'm going to cut the stream, it's just really not much kind of going on here. So there are no long targets from where we are now. You know, obviously resilience is trying to fight its way forward. We've already hit hedge pressure. There's really nothing to take off of it. So nothing to do. Do you guys like this like style of analysis? Pretty much keeps you from doing silly stuff. Yeah. Would I take daily ATR into consideration? I know people do. It's not something I've ever done. I don't think it's a terrible idea though. What's the easiest way to translate triple B to UVXY? Anytime you're converting one thing to the other, you just cross multiply. You have a variable ratio and a static ratio, right? You have at any point in time, let's just call it now, you're going to do A over B now equals your static, which is your target, A over B. The ratio should be the same. So example is now would be the price, UVX, triple B or VIX over UV. That'll give you a ratio. And so that ratio is dynamic because the two are trading independently. So that ratio will change in real time. It'll tick up and down, tick up and down. But your static would be like, you know, your triple B to on a VIX basis, and then your triple B on UVXY basis. So hold one constant, solve for the other. These, you have the data feeding into this. You have this is your price data, price. So you're gonna have a fraction that's just gonna constantly be there. You can make it in a spreadsheet, or if you need like a static estimate, most people just, the minute you want to do it, just pick the two prices and do it. The ratio will be off by like a couple. These things track each other pretty well. They pretty much all do. They're off by a couple percent. So your target, remember your target dances around because this is not static. So therefore that's not static, right? Your one of these is static, but the ratio is the same, and this changes. You can't display VIX on Rockscooter. Where do I get it? You just go look at a trading platform that has VIX. Like right now, let's go to Thinkorswim, $13.95. And this is $8.37. Okay, boom. There's my ratio. Triple B is $13.69. And my estimate of triple B is that fraction. Here real quick. You guys got it. So that divided by, or sorry, 30 equals 1369 divided by that. So it's about 8.214 give or take. So about 8.21 give or take is going to be triple B. And roughly equal to. And it's going to dance around as this fraction changes, right? And so that fraction is 1.666. If I were to do it again, it might be 1.676 or whatever. So give or take, triple B is around here and probably dancing in this area real time. Does that make sense? I look at it, just all you need to do is just grab the two numbers at the same point in time. Like the S&P and SPY, the fraction's like roughly 10. It's like 9.99, 10.01. It dances around, but it's close to 10. So all you really need to do is just get an estimate. These don't deviate too far from each other. I'll be right back, guys. Sorry, I'm back. Oh man, here I am. Back in the saddle. It's one thing to make a trading platform, but it's another thing to run a corporation. It's a whole different ballgame. I'm just talking to the ADP people about setting up an enterprise payroll solution. Or that, you know, the business side of business, right? So I had a scheduled call with them this morning. I'm like, I haven't used ADP since I had a job at an engineering company. So, payroll solutions. To pay all the employees. What I got? Oh no, well, James, you did VIX. I did VX futures. That's why mine was different. Because you're converting. No, you're converting a level from VX futures, which is triple B, not VIX. So you wouldn't use VIX. Remember, your static ratio has to be what you're converting. So you're converting triple B. I wrote VIX. That was my mistake. It's VX because you calculate it in futures, right? Effective, right? And then you ratio VX divided by EVXY, or however. That makes sense? James, you good? Yeah. Is that VXX on Yahoo Finance? No, I don't think that is. VXX is also an ETN, I think. Completely different thing. You need VIX futures. Yeah, VXX is the Series B short-term futures ETN. Now, it's a futures ETN. It's going to be tracking the futures contract. But you calculate triple B with VIX futures, the January contract, you need this exact number. I just use Thinkorswim, just ask me for it. Whatever ratio you make, you need to make it at least once a day for VIX. Like you need to redo the calc. So this is the current value, 1408. This is the current value, 846. You guys saw like the no trade. I didn't long into the resistance, and now it's boom, 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 boom. Pretty cool, right? James, I don't know what you're asking me. Why? That's, yeah, VIX. Oh, you said currently. Yeah, don't use VXX, right? Because VXX has nothing to do with any of this. It's another product. You need to calculate what it is you're comparing it against. You have two things. You want to find out what triple B is on UVXY. Triple B is calculated on VIX futures only. That's where it's calculated. So you have to compare VIX futures only. That makes sense? Okay. I don't know what you're telling me on Yahoo Finance. VXIND1? I don't know. Hold on. Futures first near term in. No. I don't know what that is, to be honest. You might not get live futures from like Yahoo Finance. Usually I get live futures data from like a trading platform. Hold on. Let me see if I can find it. Hold on. Usually you don't get free live futures data, unfortunately. I'm not sure what that is. Yeah, no, I don't know what that is, James. You'll have to figure it out if that is or not. Oh, look at that yellow line. Look at that. How fun is that? So if you're in the short and you hit there, great trade. Gonna sit out on this one today. I'm glad I didn't touch it. Little 20-point dip there. Now the question is, do I want to do anything? All right, so if I did want to buy it yellow, you know, where would it go to? Let's find that middle area. Is that here? Yeah, so no, that's good. Let's call it a day. No trade today again, 3 days in a row. Making it easy. Can't you, don't you have Thinkorswim, James? Or you can always just ask me, and if you're on the stream every day, I mean, you're here every day. I thought we had VIX and Rocket Scoop. Hold up. No, we don't have VIX. Oh, we don't have the... We should... I thought, let me double check. We should have it, because we have it here. I know I asked to have it, so let's see. And this is actually not calculated from our data feed. This is calculated from the website. The DD band. But we don't have the close and open data. No contract selector, so it's like these we don't even have. Figure out. I don't need it. Why do I have all this stuff on here? Bitcoin. All right. You should just get Thinkorswim. That's what everyone pretty much does. And you can actually write a spreadsheet that calculates it in real time. Like it transfers the data from your platform to the spreadsheet and it updates the cell every 2 seconds with the actual value. on MHP. Oh, did I turn MHP off? No, it's not the data was wonky. The data just dropped for a couple of days. Sometimes the data providers will do that, or sometimes and actually this happens sometimes too. Sometimes our algorithm has a check in it. If the data is not considered good, it won't print anything. So that's also something that can happen. See, it's the monthly data it's not calculating monthly hedge for sure, and we don't know why. We sent a note to our data providers, so we're not getting the monthly information. Everything else is good though. But you have to know, since it's the beginning of the trading month, monthly hedge pressure is going to be comparable to where SPY is, which is like way down here somewhere. Yeah. I'm glad I sat this one out. It didn't take a long, let the market pull back. Really nothing to just, deal with today. Let today do its thing. Ideally, what I would like to see, as we're hinting, getting some possible volatility, I kind of want to see this, do that. I'd love to see a multi-day selling process to continue to break as we lead into New Year. Even if we do trade lower, I don't think we break this yellow line and go lower. I think this is the low of the year. Low for 2024. I'm not going to lie. I think that we're going to quickly be rallying. So I'd like to see a multi-day sell-off. This red line that kicked us up, I don't think we're going to break it. Yeah, walls and all that's fine. It's the only thing that's been missing has been monthly data, and I don't know what's going on with that. And again, like I said, there is a check in there that if the algorithm determines the data isn't good, like we get a bad packet of data or the data comes in late or something like that, then we just throw it out. So it could be hitting that check that there's a delay in the feed. Like if the data comes in 10 minutes late, we don't consider it. We don't give you a bad calculation. So we actually do integrity checks internally. There's other integrity checks, which I can't tell you what they are, but it could very well be possible because we have the raw data. We keep putting in the investigation. First day we didn't have the raw data, so now it's like I haven't checked yesterday and today yet, but we sent it out to the data providers. So we're gonna look into it this afternoon to see where monthly is. But all the rest of the data is good. But we're either not getting monthly data or we threw it out because it wasn't good. Like if Greeks are missing from the data dump, and then we'll throw it out instead of making a calculation with bad data. Things like that. How did I fix earlier this week or last when DD bands didn't load on futures? It's weird. Like mine was doing the same thing. All I'm doing is, and again, we're investigating. It has to do with Microsoft Edge shortcut. I'm just turning off. I'm just like toggling drawings on and off, and then they pop up, and then refresh. Like I'm just clicking refresh and then turning things off and on, and then they pop. And switch tickers. So whatever I'm doing is dislodging. There's a communication issue with the main window in the server. Jared, that should be getting it to work. And again, that's something we're investigating right now. It's just an Edge, and it's just in the Edge shortcut. Windows just changed something. You can now add an app from a website. They kind of like took our little trick that we've been using all these years and Now you can create an app out of any website, and Windows basically does the same thing. It makes a shortcut, gives you an icon, but it's like internal process. Now I think since that update came out, Edge has been, our shortcut process has been really weird. It's just timing out. The connection's slow, and for whatever reason, just on the main window, and it's just for this. Yeah, like that's what's basically, yeah. Yeah. All right. Well, I look to trade off the support level. One can always trade off of a yellow line in any direction. Right now, irrational, right? So if I trade it, it would be small. Resilience is negative, so that's the high. So there's an R and R from here to here if one were to take a trade. So not a terrible idea. I just don't. The day is practically over whenever you hit like actually not really yet, but anytime you hit like any support or any random roll, like I guess this is an illiquidity pocket. Anytime you hit an opposing wall, that pretty much ends the downside trade. So the upside trade from here to here, you have to buy proxy, right? So while the S&P could essentially move up to there, you know that NASDAQ is kind of limited to hedge pressure on a tap. So wherever NQ proxy would be, you know, along from here to there on Qs would probably, remember, we mirror the index products together. So the S&P has like a limited upside. So let me repeat what I'm saying is that on S&P merit alone, we find out how far can it go till it bumps into something. Well, okay, this is the next thing. And resilience is negative, so that's clearly resistance, right? Also, on the way up, NASDAQ is going to bump into hedge pressure, which could cause NASDAQ to sell. Even though there's nothing for the S&P, NASDAQ's going to have a fight here. So if one were long from here to where NASDAQ touches hedge pressure, because I look at them at the same time. Does that make sense, Michelle? So NASDAQ may hit this and reject, and the S&P is going to like probably maybe trade with it if that happens. So for me to get my full trade on the S&P, I need NASDAQ to also break hedge pressure and keep going. So in reality, I tell myself, well, there's just a little bump that I can get, and then it's going to be hard from there because you're going to have hedge pressure concerns in Q. So it's like 7 or 8 points on a scalp. Not a terrible idea. But hedge pressure break makes the light red, so it's a small trade if I do anything. Whether I trade the S&P or NASDAQ, either one of them, I'm watching them both. All right, let's call it a day, you guys. Love it. Pretty chill day. Fell the yellow line. Last trading day of the year. I really don't want to take any risk on this. I'd like to see the market trade down. I'm not going to lie. A little bit. Just a little bit. Maybe a day or two. But going into New Year, I'm looking for the market to be really, really bullish. I think we get a return to bear zone on Qs. It's not impossible. I think you probably get a hedge pressure tap. It's hard to determine because we have nothing that tells us that. I personally, like I'm hinting, I wouldn't personally be longing from here at all. We got VIX considerations, volatility considerations. Triple B is feeling this today. I wouldn't be trading this today. I wouldn't be looking for opportunity today at all. Anytime VIX is hedging itself higher off of any bull support above triple B overshooting pivots, it's just not good long setups today. Yeah, taking it easy. So I personally wouldn't do anything. If there is a scalp inside of here, I think there might be that 7 or 8 points, but yeah, is H Patel. So this is kind of like no man's land. It's too risky to the downside. If yellow breaks, you can fall 20 more points to DD. You can fall 20 more points to this equilibrium here, right? Which is about there. Very possible. This is what I mentioned earlier today. It's kind of just, I personally, if I were to sit back, I'd rather miss out on a little bit of an upside to let the market sell off for a couple of days and really hit it long at the new year, right? Save my money for a good spot. So there's the middle. There's that equilibrium. I personally would love to long from there, but that would be way down here. So you wouldn't have much of an opportunity to really take a big trade. So let's eliminate that. And then of course, if this falls to there, that falls to there. And then like, what would you do, right? I mean, you've got all kind of irrational checks at that point. It'd just be kind of like not a good sign. NASDAQ's about to find lower lows. So NASDAQ's taking another leg down. By the way, the NASDAQ's moving first, as you can see. It's trying to move. And you can see how like the markets are, and this is why I tell you, we kind of want to watch the indices together. You see how once NASDAQ started selling 1, 2, 3, 4 red candles and the S&P had only 2 candles, S&P's holding along, NASDAQ starts selling, the S&P reflects whatever stocks are there. So I always watch them all together, making sure I keep an eye on all of them. So NASDAQ started selling first. It's kind of the wonkier one. Oh, nice. Oh, you shorted hedge pressure? Yeah, like I said, that's not a terrible, like a lot of people do that. It's not the trade I always take. But it's not a bad trade. As you see, there's no red arrow there. It doesn't mean it doesn't work when it works. As long as you set up R&R and makes sense. It wasn't a terrible idea because you have here at the time, resilience was positive, so I knew it was like short-lived to there. I just don't take it on 5 points. But that part is relatively unpredictable as well. This is no man's land, but it's not a terrible trade to take by any means, to short off of a pivot if you think you're gonna get some volatility on it. The idea that you got in, got out super quick, that's exactly how you want to trade volatility. You're scalping those quick Vs, you know? So yeah, good job, man. Good job. I love that you love it, dude. Exactly. And it's like, it was such a sharp pivot today. I was really lucky on that one. It's like my first thought was we would have a little bit more downside today. Then I was just, I avoided it, but I'm glad you saw it, which is good. Ooh. 800 bucks. Oh, love you, dude. Love you too, man. Good job. Risk management's key. All right, Sky here. We'll see y'all. Happy New Year. Y'all take it easy. I'm gonna go spend some time with family today. I'm gonna hang out with my mom, my brother flew into town, the family. I'll see y'all later. Have a good one. Happy New Year if I don't see you or talk to you until then.